Debuting on the Nasdaq, SpaceX. Well, it's the biggest IPO in history. What do you need to know about IPOs and SpaceX? This is going to be a great show, and we'll certainly give you something to talk about this weekend. It seems like everybody's talking about SpaceX, so stick around as we'll cover that today. Good morning. This is Protect Your Assets. I'm David Hollander. We have a lot to talk about today. I'm sure you've heard the headlines about the SpaceX IPO that happened yesterday. Here's some things out there. Wall Street issues its first SpaceX ratings out of Barron's from Forbes. SpaceX IPO draws more than $250 billion in demand. And this one, investors place multiple $10 billion bets on SpaceX IPO from Bloomberg. Now, let's get started. Well, yes, the IPO fever is in full swing. The S&P 7431 up 1.4% on the week. We had the Dow also up this week a little bit, almost 1%, over 51,202 to close. Nasdaq up almost 1% as well. And the Russell 2000 up 3.9% for the week. Had a very strong week year to date, up over 18%. 10-year Treasury right under 450 at 449, and crude down this week pretty big at $89 a barrel. So we're going to talk all about SpaceX, don't you worry, on today's show and what it means for AI IPOs later this summer, because that is a big question. But overall, what did we see this past week? Well, tech is cooling off. The recent pullback we saw in semiconductors reflects some profit taking after a possibly too far, too fast rally with improving strength we're seeing across the market. Obviously, they're still talking about a potential U.S.-Iran deal, which could support that broadening trend in stocks. But the IPO demand, well, it's there. The SpaceX debut was a real gauge of investor sentiment. We'll talk more about that. But overall, caution. Here's your cautionary flag. If you're out there, yellow flags flying. History suggests some caution after the initial excitement, as large IPOs have often underperformed the broader market over their first year. We'll talk about that. The Fed right now remains on hold. They're going to get back together again this week. For markets, a high for longer backdrop rather than a shift back towards tightening could be supportive of the value overall, particularly if it relates to stable economic growth and easing inflation pressure. So I had a great question come from one of our listeners about the World Cup and how would one think about investing in the World Cup. Now, as you know, the 2026 FIFA World Cup kicks off this week, just started. It's all over your cable network. It'll be the largest. 48 teams are going to play 104 matches. I just thought about that. And the longest lasting World Cup in history, lasting 39 days. Additionally, it will be the first edition to be hosted by 3 nations, U.S., Canada, and Mexico. And attendance is projected to hit 6.5 million people. This is what I find staggering, is the people tuning in globally. Get this, 6 billion people. That's over 70% of the world population. So you might be thinking about who's going to win. Certainly, I think about that. I love Argentina. It's family related, go there a lot. So I'm rooting for Argentina, sorry, but it looks like Spain. And then France could be the teams that do it. We'll see. There's always surprises. But the event is expected, without much traffic, to impact the economy. So what are some things you should think about if you're looking at potentially capitalizing on the World Cup? Of course, these are things you may want to think about. Maybe you don't. I would talk to your financial advisor before you do anything. But some of the areas that could do well would be restaurants, sport bars, food and beverage, transportation, lodging, media, and certainly gambling. Investment banks and various analysts have put lists out there. You can see them if you'd like. They're stocks that could benefit from the World Cup. Again, these are potentials. Bottom line, with record numbers of people attending and watching the World Cup, there are some sectors, some industries, countries, stocks, ETFs. Well, they could do well. Might be worth looking at. So thanks for the question. Appreciate that. What are we looking at next week? It's a lot coming up. We got the Fed meeting, press conference. We're going to have some more inflation data coming out. We got the treasuries we're looking at, depending on what the Fed does. And of course, this will be the first week that SpaceX actually trades throughout the week. So we'll see what happens to that IPO. Make sure you speak with your financial advisor who can help you navigate economic, geopolitical, and policy shifts and help ensure your portfolio remains on track to achieve your financial goals, particularly if you're looking to create income from your portfolio if you're at or near retirement. If you need help, call us. We are the Liberty Group, and we'd love to help you. Go to our website, libertygroupllc.com, or speak to an advisor right now. Call us 866-PROTECT, 866-PROTECT. Give us a call. When we come back, what do you need to know about SpaceX? Stick around. Welcome back. I am David Hollander, also known as the Sandman, and you are listening to Protect Your Assets this morning. And the stock market, all-time highs once again. SpaceX just went public, and everyone wants to know about the SpaceX IPO and what they can do about it. What do you need to know about IPOs? If you're curious about the SpaceX IPO, then today's show is just for you, as I teach you how to look at IPOs, also known as initial public offerings. I'd like to thank Stevens Creek Porsche for last week. We had a really great event. This is probably one of the best events we ever did. There was a lot of people. We had pinball, simulators, all sorts of people came out. It was really fun. Thanks again for doing that and hosting it. It was really fun to meet you and to be there, and look for more of those as we continue to enjoy this wonderful area that we live in. IPOs are by definition a gamble, and the risk-friendly hedge fund community typically plays a key role in propping up demand until the wider market provides support. SpaceX was a little different. First of all, it was fast-tracked into the Nasdaq 100 index. That's coming in the future here, and this did have a huge retail following, which we're going to get into. So what about SpaceX and why was it so popular? Again, these are some headlines that just came out this morning. I was just taking a look at some of these things. Wall Street Journal said, inside SpaceX's expanding role in national security. And then there's a blurb here from the Wall Street Journal saying, SpaceX becomes so critical to U.S. defense that officials determine its military contracts can't be cut. Why SpaceX deserves your attention, from the Financial Times. So there's just a lot of news out there about this. And part of it had to do with the retail investor being involved in the initial public offering. So what are investors really buying? Well, first of all, SpaceX is not just rockets. They're buying Starlink's current economics plus a long-term option on AI, space compute, Mars, moon infrastructure, and of course, Musk executing on all of those things. But the retail investor, once again, was somewhat pivotal to this record-breaking IPO. What about it? Retail access was a central part of this IPO. Typically, when you see a IPO come to market, like I just said, the investment banks usually keep a big portion of it. In this case, the retail allocation was above the typical. They were talking at the beginning around 30%. It came in, looks like around 20%. But the typical retail allocation is typically 5 to 10%. So there was more shares that were out there on the retail space. Some of the brokerages that participated in this were Fidelity, Robinhood, SoFi, E-Trade, Schwab, and Webull. The Fidelity minimum They dropped it. Went from 100,000 down to 2,000 account. There's also been some flip restrictions. 15 days at Fidelity Schwab, 30 days at Robinhood, SoFi. So how do retail mechanics typically flow? Well, first of all, you request shares. Retail then asks through the brokerage for these shares. Then there's an allocation cut. Many may get a partial fill. Then you got the public open. Unfilled demand may buy the market. So once they're actually trading, you can go out and buy. Early holders, allocated holders may sell into that demand. And then you've got your volatility. And retail can amplify the moves to a stock. So what's supportive of this whole aspect of the approach of what they were doing here? Well, retail demand could support a strong open and create scarcity if allocation was limited. We certainly saw that yesterday. Retail buyers chasing a first day pop and buy from earlier allocated investors. How about the other interpretation of that? Musk's Tesla retail following could create a sticky shareholder base. Some retail buyers may be quick to flip these trades, and they're not really long-term holders. Brokerage access democratizes the participation. That's one of the stronger arguments. What does that mean? Well, there's lower minimums, and this could expose smaller investors to this highly volatile IPO. So that's a lot about the retail aspect of this that was different than your traditional IPO. But what does it mean overall? Well, it means you can go on any app you use to look at stocks now that is trading publicly. The symbol is SPCX. That's the symbol now for the SpaceX IPO. That went IPO Friday. Now it'll trade on the Nasdaq. Again, the symbol is SPCX. Make sure you read all about it before you just buy it, of course. They were just covering what it was and what it means. And you can see what the stock is trading at during the market hours. Now, market hours typically are on the West Coast here, Monday through Friday, 6:30 a.m. to 1 p.m. Pacific when it closes. Now, there is after-market trading, and so I wouldn't be surprised to see that as well. The company offered a percent of the total stock. This is where there's some confusion out there about the valuation of the company. I got this question. So reportedly, SpaceX put out there to trade 555.6 million shares. It's a lot of shares. But what does that represent in terms of the entire company's share makeup at this point? If you do the math, it was a little over 19% of the company is what that represents. So again, doing some quick and not necessarily correct math in my head, the company could be worth over $2 trillion because they're still sitting on about over 80% of the shares. So is the first trading day of an IPO really that important? Let's look at some past IPOs that had a lot of hype. First, Rivian. Remember Rivian? Nice trucks. It's up 22% on the opening day. Then it was down over 67% over the next year. A strong first day does not guarantee a strong long-term return. Did you hear what I just said? So keep that in mind. Reddit dropped on day one, later climbed nearly 150%. Result, weak first day does not guarantee failure. What about Snowflake? Over 100% first day gain, later underperformed 6 months later. So again, blockbuster pops can fade. Facebook IPO, I remember this one very well. Came out at $38 a share. Went down to 17 pretty quickly. Everyone thought, oh, that's over. It's done. Down 54% over 133 days. So even strong companies can trade poorly after IPO. Robinhood down 82% from the IPO high before later all-time highs. So better entry points could appear later. Coinbase sold off, bounced, then went lower before rallying. IPO volatility can unfold in waves. What about Amazon? Right, another one. IPO market cap around 438 million. Huge long-term returns came from a much smaller starting valuation. So what does all that mean when it comes to IPOs? It's impossible to tell. And you really need to be thinking about the company. Is it something that makes sense for your portfolio? How much of it should you buy? Are you at or near retirement? These are all really good questions. And if you need someone to help you think through these things, well, that's why we're here. That's what we do. We are the Liberty Group, and we're here to help you with your investments. How do you find out more? How do you find out something like this is appropriate for you? You call us. We're here right now. 866-PROTECT. You just pick up the phone right now. Give us a call. We're going to give you a free report this morning. It's our checklist. 866-776-8328. We'll mail you this morning. Email. Need your email. Give us a call. 866-PROTECT to get this important report. Coming up next, it is time for our fan favorite They Say segment, where they say the Nasdaq 100 is important for SpaceX. Is it? Find out when we return. You're listening to Protect Your Assets with David Hollander. That's me. I am the Sandman. We'll be right back. Welcome back. I am David Hollander, also known as the Sandman. And you're listening to Protect Your Assets. And people call me the Sandman because I help you sleep well at night by protecting more what you work so hard for, answering your tough questions. And that reminds me, if you missed this morning's market segment where I talked about the World Cup, that's going to be another potential big impact right now on things in the market as it relates to specific indexes. You might want to go check out our podcast wherever you get your podcasts. You can just type in Protect Your Assets and Market Segment, and you will find some information there on the World Cup. So the stock market is at an all-time high right now. SpaceX just went public, and everyone wants to know about the SpaceX IPO. Just breezing the headlines this morning, once again, saw some more information out there. Some of these headlines that are out there. I like this one. This is New York Times. SpaceX IPO set to mint 4,400 new millionaires. And of course, this is some of the conjecture out there about the, this was in Fortune, SpaceX and Tesla merging. Is that going to really happen? I don't know. There's a lot of good questions out there, a lot happening, and that keeps things exciting. So in the previous segment, we were just talking about IPOs in general and what are they? How do you get access to them? What does retail versus institutional mean? Covered all that in the last segment. Again, if you missed it, check out the podcast. Now it's time for one of our fan favorite parts of the show. This is our They Say segment where we debunk common myths, half-truths, and sometimes just bad advice that they say. All right, so here's one they say. They say that the fast tracking of SpaceX into the Nasdaq 100 is important to the value of SpaceX. Is that really true? Well, the answer is it very well could be, and here's why. The Nasdaq 100 index is a stock market index that tracks 100 of the largest non-financial companies that are listed on the Nasdaq Stock Exchange. So at the start of the show, we were talking about SpaceX and what it is right now and what's going on. It's on the Nasdaq. So the Nasdaq 100, these are some facts you need to know about it. First, major tech companies are on it, like Microsoft, Apple, NVIDIA, Amazon, Meta. There are no financial companies that are on the Nasdaq 100. So banks, insurance firms, etc. are excluded. And that's maybe one reason why it's different than a lot of these other broader market indexes. Third, it is market cap weighted. This one's important, meaning larger companies have a bigger influence on the index's performance. So it's all driven by size. Obviously, there's a lot of questions around the size of this and where it's going and what does it mean, particularly if there's other things happening that merge into it. Nasdaq 100 inclusion could create forced buying and ongoing passive exposure to an index, meaning that SpaceX's inclusion in the Nasdaq 100 would create buying that is not based on discretionary valuation analysis. As the index is comprised of these companies and Nasdaq 100 index companies who create these type of index funds, ETFs, etc., they'd have to buy SpaceX once it's confirmed in the index, which could be within the next several weeks. They're quoting 15 trading days, according to reports. That would provide access to 401ks, ETFs, retirement accounts that have these types of funds in them as choices. Apparently, Nasdaq loosened rules to get this listing from the New York Stock Exchange. Some controversy about this, but the float apparently was loosened from 10% to 5%. What does it mean? It means that Nasdaq 100 index inclusion can create demand that is more mechanical as opposed to emotional. Funds that track an index may be forced to buy SpaceX because the rules require it, not because they believe the value is attractive. This trading activity and IPO was important to the market because it may act as a public market referendum on the next wave of mega cap private companies that we've been hearing so much about, mainly in the AI space. The overall performance could shape timing and appetite for AI-related offerings that we've been hearing about lately. What about other indexes in the future? This is a big controversy point right now, too. S&P 500. Apparently, again, these are all reported. The S&P 500 was asked if they could fast track it. It was rejected. And the reason was because of the profitability requirements for companies that are listed on the S&P 500. What's the timing of a potential S&P listing? This is, again, very controversial. You can read about this. Again, depends on the reports you read. Some are saying 2027, 2028, potentially possible. It all depends on profitability. What else could happen if you're in this particular Nasdaq 100? Funds that own holdings could have to sell some of these off to make room for the pressure that's exerted by SpaceX as the value climbs. So that's where the business overview and the business case of the stock becomes very important. There's certainly lots of things to talk about. We'll talk more about this in the next segment. But things like Starlink connectivity, it's the revenue and the profit engine. $11.4 billion in revenue, apparently $4.4 to $4.42 billion profit operating income. What's the main risk there? ARPU decline, future churn, CapEx to maintain the satellites. What other businesses are in this? Well, space launch, rocket launches, reuse Starship satellite deployment. The strength, well, the technology advantage. And these reusable rockets, that's advantageous. What's the risk there? Some demand could be internal to Starlink. Obviously could lose segment if other competitors come on market. What about this whole AI segment? This is another part of this whole thing. AI infrastructure, they have this thing called Colossus. These data centers maybe you've heard about. Potential there for Anthropic, Google to have contracts with them that we've heard about. More revenue. You also have far future satellite. This is some of the the War Department we heard about with the U.S. having to have this for future satellite manufacturing and launch from the moon. I mean, think about it. This is all very out there. Satellite to sell. Potential global mobile coverage through satellites. Again, these are all very speculative. Don't forget that. Are you concerned with how your portfolio, I'm talking about stocks right now, how your stock portfolio may produce income when you decide to retire? So when you retire, and with this market moving around, where are you going to get your income from? And so we are more than happy to make calls and to help you review your plan and to see if this could make sense for you. And again, remember, everybody's situation is different. So you need to sit down and talk about it with an advisor and see how it works out for you. We can look at things like your Social Security and how you might withdraw money from your pension. Also from your 401k and the investments you've been saving. How would you take money out of those? And what should you do now to prepare for what's coming here in the future if you're going to retire in the immediate future here? All it takes is a simple phone call to us right now to get started on this. We have a report this morning. It is our retirement checklist. This is our recent checklist on things that you may want to know before you make that decision. I'm going to go ahead and email that to you this morning, but you have to call us. 866-PROTECT is the number. 866-PROTECT, and ask them for this report we're giving out this morning. This is the checklist, retirement checklist just for you. Again, 866-PROTECT. It's time for a quick break, but when we come back, find out why Elon Musk is so critical to SpaceX. It's all coming up next. Stick around. Welcome back. I'm David Hollander, also known as the Sandman, and you're listening to Protect Your Assets this morning. And we just had the SpaceX IPO go this week, and everyone was super excited about it. There's tons of headlines this morning about what's going on. And so we've been trying to cover this morning IPOs, what you should know about them, how this one is different, what are some things you need to research, certainly before you take a look at it. And that reminds me, if you are interested in paying less in taxes this year, then we have brought back our tax planning workshops. And so if you've wanted to pay less taxes next year on this year's income, but you haven't really done anything about it, it's not too late. It is June. You got rest of the year to go, plenty of time. And how you could get started on that is attend one of our dinner workshops, where we get into what we're doing right now with other clients when it comes to reducing their taxes. And of course, these examples I'm talking about today, these are client specific. These clients are not compensated for sharing this information, and the experience is not representative of all clients. And of course, there is no guarantee about any sort of result. And individual circumstances certainly matter. So again, you want to get with your financial advisor, sit down, develop your own plan, and talk about what you're trying to do. But if you'd like to come to one of these workshops, we will be doing them in Alameda in early July, and then again in Larkspur in early August. We need you to reserve your seat. Otherwise, that's it. If you'd like to register for these tax planning events that are coming up, want to see if they're near you and you'd like to attend, you can do that right now. You can reserve your seat. Go to our website, libertygroupllc.com. Click on the events tab at the top. You'll see these little blue buttons next to the restaurants in the cities that maybe you want to visit or you're nearby. And you just click register, and that's it. Just follow the instructions from there. It's all over the news right now, the SpaceX IPO. What does the future hold? And why is Elon Musk so important to SpaceX and the success of that? You should take a look at the prospectus to find out the governance and control of this company. It's super important because the dual class structure means that SpaceX can become public while remaining effectively controlled by Elon Musk and some other insiders. Why is that? Well, there's share classes. In this case, it's a dual class voting structure. Different shareholders have different voting power. There are these things called Class B voting shares. You get 10 votes per share, and Elon Musk controls most of those. So at this moment, he controls over 80% of that decision making. So insiders retained outsized control in this instance. Public investors have economic exposure with limited governance in the influence of that with the shares. So just keep that in mind, again, because remember, only a fraction of these shares were put out there on the market. Founder-led benefit, again, by Elon Musk. His long-term vision potentially could be preserved here as a result of that. And so there's less pressure on him to follow short-term public market demands. What's the governance risk? Well, you have limited public investor influence, and investors have less control if strategy or capital allocation concerns start to emerge. So effectively at this point, what Elon says goes. And because of this structure, you as an investor, if you do buy shares in this, just know that you're going to have a lot less control. So with all that being said, if you'd like to know more, you can pick up the phone right now and call us, and we can help you figure out whether or not something like this makes sense or what you should do about it if this becomes available in your 401k or retirement account, as I said, because of the index allocation. That looks like it's coming. Call this number, 866-PROTECT. The number again is 866-PROTECT to get our retirement checklist that we're giving away this morning. We'd like to give a big thanks to the Protect Your Assets team for putting together a great show today. Executive producer, network manager, Kevin Renfer, and all my fabulous producers back there, Phil, Raph, Nick, Zach. Thanks, guys, because without my team, I'm just another pretty voice on the radio. You've been listening to the Protect Your Assets show. I am David Hollander, the Sandman. Go out and make the rest of your life the best of your life.